So the darker side of trading. Now on social media, you're going to see a lot of happy times in trading. Big payouts, high winning streaks, high risk rewards, things going well, a lot of winning, 100%. You're going to see a lot of that. The less spoken about parts of trading, the drawdown, the losing streaks, the tough times, is of course going to be swept under the carpet a little bit. And I want to make this video because it's a very, very important part of trading, because although it's in a lot of best interest for people online to show you all the good times and kind of not talk about the hard times so much, but as a trader and people who are watching this video want to be traders or traders currently, of course know that tough times is inevitable. Everyone will go through them, and it's normally the people who can go through these tough times and losing streaks, losing trades, are the people who eventually will see success in the markets. And I've been reading this book. Well, I read it probably a year ago now, but I have been revisiting it, by Tom Hogarth, The Best Loser Wins. A really, really good book. If you haven't checked it out, make sure you go do so. But yeah, it's a great book. And of course, as you can see by the title, Best Loser Wins, it talks about how the best loser is eventually the winner. And that is one of the most truest statements I've heard in this trading space, because it generally is the best loser who wins. Because when was the last time you took a trade and you expected the market to, let's say, go up, but you decided to sell? You always take a trade expecting the trade to play out, the trade to win. You don't look at the market and think, okay, pound USD looks like it's about to go up, so let me just sell it. You never do that. You sell it because it looks like pound USD is about to go down, so you sell the pair. So if the market goes up, it goes against your expectations, it hurts your feelings, hurts your ego, and of course, hurts your trade and account balance as well. So going into every trade looking to be a winner is an exact contrast of what it is to be a trader, because trading involves losing and winning, managing both of them. And you have to be able to lose very, very well as a trader, because it's an integral part of your trading. A lot of people, Tom Hogarth himself speaks about his win rate is around the 50-60% area. So half the time he's winning, other half time he's losing. The only reason why he's profitable because his winners far outweigh his losers. Well, of course, in the industry, with the general population, so the inverse. A lot of people have, I think the win rate is pretty similar as well, 50-60% for the average trader, but most people lose a lot more when they win. And at the moment, I'm going through some drawdown on my funding challenges. With funding pips, as you can see here on the screen, I'm down 2.38%. It's been a tough start to the year, incurred quite a few losses, had a few wins here and there, but had quite a few losses, and I'm down 2.38%. The risk has been managed pretty well. I'm risking 0.5% per trade, so I'm lowering that risk, making sure that I'm far, far away from hitting any type of drawdown limit. And then when I do get a bit of a buffer, as I've spoken about on my series, if you haven't checked it out, make sure you go do so, documenting the whole challenge. But when I do eventually hit a buffer of 2%, I will increase my risk to 1%, because now I'm actually using their kind of buffer rather than my stake. Because at the moment, the more I lose, the closer I'm getting to that kind of drawdown limit. So I want to make sure I'm far away from that as possible, risking small. When I eventually do get a buffer, yes, it will take slightly longer, but I'm happy to do that, and it gives you the best chance of passing as well. So currently down in some drawdown coming into the year, and again, it's been a difficult start. And again, you don't choose the starts you have, because last year was a great start to the year for myself. In 2023, I didn't plan 2024 to have a tough start, but that's exactly what's happening. So the important thing is making sure that I'm focusing on my edge, focusing with myself as a trader, my habits, my routines, and making sure I'm taking the best trades I can find. Because again, the best loser wins, as I just said, and at the minute I'm losing, so I need to make sure I become the best version of myself. And I want to touch upon just kind of the realities of trading as well, the probabilities of it, because at the end of the day, we're just trading probabilities. We don't have 100% certainty that the next trade we'll take will win. We just deal in probabilities. So I want to make sure that people who are going through drawdown, going through tough times, are kind of really fully aware of the probabilities. Go read Trading the Zone by Mark Douglas, very popular book, but it kind of best illustrates the the power of probabilities and really understanding it and really internalizing that information, because a lot of people don't really do that. As I just said with the previous example, you look at pound USD, it looks like it's about to go down, so you sell it. You're not really thinking about probabilities. Pound USD looks like it's about to go down, so let me sell the pair. But you're not really thinking that, okay, I'm dealing probabilities here, best manage my risk. It may go in my favor, may not go against my favor. You're not really thinking about that. You think uncertainties. And this website here, duediligencehub.com, I found it recently, but it has this equity curve simulator. And this is really, really useful from kind of just picturing the long term of your statistics in trading. And I've crunched some numbers here. I've gone for 100k starting equity, 40% win rate. So kind of forgetting about break evens, just looking at your wins and your losses. So for every 100 trades you take, which are win or loss, 40% of them win, 60% loss. Great risk to rewards with a 3-to-1. So we make 3% when we win and 1% when we lose. Number of trades simulated 100 number lines. So 100 different kind of probabilities playing out. And of course, one risk per trade and a normal scale. So not like logarithmic or something like that, just a normal kind of compound scale. And you can see with the stats here, which I think is really, really interesting, especially when you're looking at doing challenges as well and kind of preparing yourself for the risks you potentially could go through and endure. If you look at this, the biggest max drawdown, 17.5%. So if you really understand these numbers, if you're in, say, 10% drawdown, 11% drawdown, 12% drawdown, a lot of people will be panicking at these numbers and thinking there's something wrong. Let me change the system. I need to do something. But actually, being in 10, 11, 12% drawdown, you're actually inside the parameters of your strategy, of the probabilities. You still do have a winning system here. 40% win rate, 3-to-1 risk reward. Crunch the numbers, it's profitable. You can see the equity curve here. The black line is the average performance of these individual equity curves, and you can see it's pointing up. As long as you're crunching these numbers in the long run, your account balance will grow. You'll be profitable. You can see there's different kind of probabilities here. So you can see the max equity up there, 280,000 minimum. You round break even. But if you're sticking to the numbers on average, you'll be with that black line. If you perform a little bit better, you'll be up here, a little bit worse down there. But these are the maximums within that kind of probability, within those percentages. And you can see the biggest max drawdown is 17.5%. Of course, there could be things you need to improve and tweak, and I'm a big fan of tweaking your system and refining it. And I'll touch upon that in a bit of detail in a moment. But you have to be aware of your potential max drawdowns. If you're on 5% drawdown, you're thinking about changing your system completely, well, that's completely irrational, because the average max drawdown of this system is 8.6%. So you can expect to endure 8.6%. That's the average max drawdown. So if you're going to take 100 trades in your account, you're expecting to be down around 8.6%. And again, that's the average. It may be 9, it may be 10, it may be 6, it may be 12, but it's an average, and you have to accept that from a probabilistic standpoint, because that's what trading is. You're going to go through tough times, you're going to go through drawdown, and if you're going to take this strategy, which is a winning strategy, remember, which is what we're after as traders. We want a winning strategy. You want to be able to trade that strategy profitably as well, and scale our capital, because that's the easiest way forward. You're not going to look to achieve a 100% win rate, try and win everything and grow your account from 10k to 100k in a month. Of course, you can try to do that, but there's not much sustainability with it. This is the winning formula, which will keep you in the game for the long run, managing risk. Of course, risking 1% per trade. Your max drawdown is 8.6%. Average performance there is 77% for every 100 trades you take, and that's a great return. And of course, if you look here as well, max consecutive winner 10, max consecutive loser 16. Imagine you're going through 3, 4, 5, 6, 7, 8, 9, 10 losers, and you start to panic. Potentially you could go through 16 and the system will still be profitable, still be have a positive return over the long run as well. So I want people to check out the website, go through the simulator as well, crunch different numbers. Again, if I let's say put it to 30, You can see that overall it's still just about profitable. Of course, not as profitable as the 40%. Of course, 50%, you're very profitable at this stage. Your equity curve is flying to the upside there. Max average drawdown 6%, max biggest max drawdown 14.9, 168% there. So you're really rolling in the profits in this stage. But again, if you look at the max instead to the loser, still 16 as well, even though we've upped the percentage from 40 to 50. So losing streaks, it's inevitable, it's supposed to happen. You're supposed to go through that. Tom Hargard, very, very good trader. He's had a lot of years experience, I think plus 20. And his win rate is around 60%, which is what we've just shown there as well. So him as a trader will go through losing streaks as well. And, if you look at yourself, I've been trading for almost 7 years now. I'm sure a lot of you be trading for a while, maybe 6 months, maybe a year. If you're going through tough times as well, you're going to go through losing streaks, you're going to go through tough times. It's all part of the game, but the best loser does win. And if you haven't checked out the book, make sure you go do so. I'm acting like I'm the person who wrote it, but in some drawdown at the moment, but the main thing I'm focusing on is just making sure I'm taking the best trades I can. I did say it earlier, I'll touch upon tweaks and refining, because I do think they are very, very important for your system, because tweaking and refining, you're kind of crushing two birds with one stone, because when you do tweak a system and refine a system, you're normally refining yourself to that system and the system to yourself as well. And that's kind of where the individuality, the uniqueness of trading comes from, because you can give 100 different people the same strategy, but if you check on them in a year later, if they're still trading that same strategy, each one of them will probably have their own kind of quirks and their own little things they focus on, which again, still the same system in terms of the entry and the approach to the market, but each one of them will probably be doing something slightly differently, and their understanding and their approach to the market will be slightly different as well. So tweaking and refining is very, very important, because it kind of will improve yourself as a trader, improve your system as well at the same time. But there's a big difference between tweaking and refining and just throwing out a system completely and just going for something else. That normally is a waste of time. I'm a big believer that it's not very difficult to come up with a winning edge in the market. Again, if you've got an idea, test it in the markets. If it has a positive return over the past 2, 3, 4 years, you've got something you can play with there, and you can mold that into something really great if you work hard with it and spend some time with it. So the edge is not really the important aspect in trading. I think you can find that quite easily in this day and age. The hard thing is the emotional side of things, the psychological side of things, the approach to trading as well. Gaining that necessary experience, I think that's the difficult part of trading, really. But yeah, guys, I wanted to make this video about the dark side of trading because it is uncomfortable, it is difficult, it's hard, but it's very, very necessary. Think about all the major idols out there, Kobe's, the Ronaldos, McGregor's, they've all gone through tough times as well, but it's the coming through them which creates the champions they are. So if you are going through some tough times in trading, you're not the only one, and it will pass eventually. Just stick through it and keep going. But guys, hopefully you have enjoyed the video. Leave a comment down below if you have, and have a good one, and I'll catch you all in the next one.